Before we end this lesson, we'll go over a couple examples. Let's see what we can find. So we have all of our break and structure lines in. Let's see what happened as price decided to decline down when it hit the next higher high. Let's see what happened here. All right. So as you can see, this is a very interesting example. So price was making its way up on the daily. So we had this, and we had this. We then have this lowest point so far. So I'm going to drag that down to there. What about on the 4 hour? Well, what does the 4 hour indicate? Well, let's see. So on the 4 hour time frame, using the 2 down candle rule for drawing in a higher low, we'll use purple structure. We'll keep this black just so we can go with the same colors as previous. All right, I don't need to go all the way back to here. Okay, I don't. I'm looking at recent stuff. So I'm going to start from right here. Price came up and made a high, a higher low, because you have more than 2 black candles, okay? And I'll draw this purple when I'm done. And then price came up and made a higher high. So according to the primary internal pull, I know that sounds funny to say, but that's how I would refer to this, because there's 2 ways you can draw structure here. Option A is to take it from here up to here and then show where it transitioned from left to right. If this was a higher high and higher low, you could indicate that it transitioned here, which would actually give you a different pull than starting from here down to here. You can do it both ways. So using method A, we'll call it, drawing it from here up, transition did not occur at all, because technically this was the higher low in the 4 hour. We haven't made it down that far yet. All right. Now, according to the method B, you could take structure as such. Price came down to here. You had 2 up candles. Okay, I'm going to draw it up. And then we came down. Okay, so when does it touch this point again? Well, it did over here with the wick. Okay, price came up. Price came down. Did not close below, but I'm still going to draw that in. I'm not going to draw it in as a break of structure. I'm going to draw it with my red X, because it's only a wick. All right, so this is what we have so far in terms of our current structure, at least on the 4 hour. Doesn't really help us a whole lot, does it? Because what that tells us is that in order to actually break structure bullishly, in order to technically target this continuation of the daily trend and get a move like that above this swing point or this daily higher high, we would have to see this guy break. But by the time this guy breaks, because he's already so close to this guy, it's kind of silly, isn't it? I think that's kind of silly, because at that point, it's probably not going to retrace. It's probably just going to go up and hit the high, right? So that's kind of a silly one, if you ask me. All right, so what can we do in a situation like this? Well, this is where you can go down and investigate, as I mentioned in that drawing, a little bit deeper. Let's go to the 1 hour. Let's take a look at what the 1 hour is showing us. Let's go to the 2 hour first, and we'll work our way down to the 1 hour. All right, so price came down. Use orange. I'm looking at this recent expansion leg. I don't really care about this whole leg now. I'm just looking at this recent one. Price came down. Price came up. Price came down. Up. Because it wicked this line here. If you had drew a line across, you can see that it definitely touched this low with this wick. And because there's 2 up candles, I have to draw this, and then I have to draw this. This, and now this. Now, you actually had a break in structure here. Okay? So structure broke on the 2 hour time frame in this example. So now you had a retracement. So price broke up. This was the lowest point right here before this was touched again. Okay, so maybe this is where some folks may have scaled into a trade. Now, ultimately, it seems like price wasn't done doing what it had to do. And remember how I told you guys a few minutes ago, if there's a reason to come back, you can come back. I wonder if that would be the case here. There could have been something that price came back for, which is something you should be monitoring. Now, this is already played out price action, so we don't need to worry too much about that. But let's go down and actually check. Was there something that price came back for? In terms of order blocks, well, look at this. There is. There's a 30-minute demand zone right here that was not mitigated. And of course, you will understand that very, very soon. So in this case here, because there was something to come back for, we came back, despite having that transition and structure from an internal approach. Even though we had that internal transition, price was like, nah, I'm going to come down and flip bearishly again. So what do you do in a situation like this? How do you get into a new trade? Well, this orange pull is basically useless now because I personally wouldn't be waiting for this to break now to verify the move. I would still use this as a take profit zone for sure. And I would feel very great about the move, or my success rather, in the event we break this high, more than likely going up to there if we do that. However, it's still too far away to use this to get into a trade. Okay, that's way too high of a break. We're talking a $5,000 pump to get up to this high. So in saying that, okay, well, let's do it all over again. Let's wipe the orange pull because it already broke structure once. We don't want to use that one again. We'll wipe this guy clean and we will use the high and we'll work our way down again. So we're going to use this, this, and now this. But it appears that you have another big break. Yeah, it's almost a $4,000 move up, guys. That's still quite the distance away, is it not? So this is where I would get creative and employ the use of an even lower time frame internal structure pull. Okay, so we're using the 1 hour. What about the 15? Of course, we cannot use the 15 that far back in time. So that's okay. We can go with the 30. I'm sure it'll allow us to go on the 30. So let's try that. Okay, let's got the 30-minute time frame up. And we'll go back to what actually happened here. It's still not going to be that great of a move because we're way too far back in time to investigate even lower time frame structure in this example. However, we'll go with what we have. We're not going to get too picky. It is what it is. So in this case here, this green pull, and I'm not using green for bullish, I'm just using green because it's what I picked. We have a move down with 2 up candles in a row, and then we went down, the same thing here. And then I wouldn't call this a down and an up, although I can tell you with confidence, based on the way this black candle appears much higher than this candle right here to the left of it, this is more than likely 2 up candles in a row on the 15-minute chart because we are stuck on the 30. But you know what? We're not going to cheat it. We're not going to guess. We're just going to go with what we have. So in this case, we have structure bearishly heading down from this high to where we hit the area of demand or the area of support. So what we need to see to at least justify a move up to this high and likely higher because price appears to have hit an area that makes sense to bounce from, this guy needs to go. Once this guy breaks, this guy's next. Once this guy breaks, this guy's next. And once this guy breaks, this guy's next. Domino effect. Okay? We'll call it the domino effect. So in this case here, let's see what we get. Okay, we didn't quite break above that. Now notice how we wicked above it. Because we wicked above that high, I would not call it acceptable behavior to close like that. That's not a break anymore. So this is another lesson regarding break of structures. You have a situation like this, you have to use the new point. If it was wicked out previous, even if it doesn't look right, technically, if you want to play the safer route, that's how I would go about it. Now, this is not a confirmed boss yet. Okay, it's not confirmed just yet. Hopefully it will be. Let's see what we get. As of now, we have not entered a trade. Okay, we're going to scale into such trade. We're going to hit take profit 1 on this line here. Underwater a little bit. Oh, we're coming up. Now, we should still pay attention to structure as a whole. This green pull. Not so much the orange pull, because the orange pull, it's already played out and it's down to this low here. We're going to watch the green pull, because if the green pull decides to flip bearishly against us now, then we probably will come down and hit this level again, taking us out of the trade, definitely taking us out of the trade. So let's be smart. Okay, price broke up officially here. And this is where we have the higher low. Technically speaking, I even drew that incorrectly. So this is where you have the higher high and a higher low, because that is 2 black candles in a row. This is not. This one is, this one's not. So I'm going to draw this up as a higher high. Take profit 1. Now, I can't do increments of 0.5s as such, and I should have opened more on my position, but that's okay. We'll roll with what we have. So we have a partial take profit at a reasonable level. Price broke that reasonable level, but because we used the 2-hour structure to draw in this orange line here, 2 hour, 1 hour was basically the same. Because we used the 1/2 hour structure to draw this in, this orange line, then we have to wait for the hourly/2 hour to close. We'll talk more about rules of engagement again as the course progresses. So let's see what happens here. Price is starting to make a retracement, but what about our 30-minute structure pull? Should we still be watching that 30-minute structure pull now that we have the 2-hour close above that previous lower high? I would say yes and no. Yes, because you're going to need to know when it makes sense to take partials out and or cut the trade because you are in significant profit. It could turn against you. It is possible that it could turn against you if you break that 30-minute pull. Okay, it is. But as of now, the higher low is still way the heck down here. You're basically in safe territory so far. Price isn't that close to it yet. Still about $1,000 move down from here, maybe more than that, $1,500. So in saying that, you're in a safe spot. However, this is where you have to realize that because you have the break-in structure on the 2/1 hour time frame now, let's go to that time frame to see what we got. But because we have the break on the higher time frame, what that tells me is that this 30-minute pull can now invalidate itself for one reason and one reason only. Can you guess what that reason is? I'll give you guys the answer. The reason why it can invalidate itself now is because continuing on with that orange pull, which I will highlight in black, you had a lower low, a lower high, and a lower low, and now a higher high. What happens after a higher high usually? You can make a higher low and a higher high, which in theory would convince you of bearish activity because you would see this as a flip in structure bearishly on the 30-minute time frame. We're going to hide that position now. You would see this as a flip in structure on the 30. And you may forget that, hey, wait now, this can come all the way down to here and still maintain its bullish stance. So what do you do to be safe in a situation like this? You monitor the structure. You can still monitor that 30-minute structure pull. And when that 30-minute structure pull decides, hey, I had enough, price comes down like this and breaks that higher low with a close. When that happens, you have to wait for the next move to flip again to show you when it's time that the hourly/2 hour higher low has been set in place. That will tell us when, right there. So yes, we still monitor it, but we can't forget about the 2 hour/1 hour pull now, because what that tells me, or what that tells us rather, is that structure is allowed to flip 30-minute bearish if it wants to maintain that newly formed trend from hourly/2 hour bearish to hourly to 2 hour bullish. That's how, and that's why internal structure is of utmost importance, because without it, without some kind of organization, you're not going to get far with market structure. You need to see how they flow into one another. And this is how they flow into one another. So this lesson will be a little bit lengthier because there's a lot to talk about. So in this case here, let's see what happens when we finally hit that area of interest right here, because we're still targeting way the heck up here. How do we do that again? Well, again, my orange pull was this. We had this, we had this guy. This was a lower low. And then we had a different pull here because we got to make a new one. So once we break this guy, what's the next target? Well, that's when I would target this guy, and then this guy, then this guy. And you can actually use these levels for areas to take profit, areas to watch as possible resistance. So I hope that makes sense, y'all. Hope that makes sense. But in this case here, the end result was quite interesting. Let's see how it played out. We'll actually go back to see if it actually produced any kind of bearish structure on top of that 30-minute newly formed bullish pull. So actually it did. It actually has. Look. We're going to wipe this up a little bit before we actually show you what happened here. So as price came back for that demand, you had the flip in structure from left to right, officially right here. That's where we entered, right? So you had the bullish break in structure. Price then came up to the hourly higher high, and you produced an hourly higher high and higher low. It was hourly / 2 hour, to be more specific. In doing so, price came down, made its retracement to wherever it wanted to go. It actually maintained the 30-minute bullish pull, and then it came up and it blasted up, made a higher high. Then you had 2 black candles in a row. This is where you had the higher low, higher high, higher low, and then it SFP'd the high, swing failure patterned the high, and then it came down aggressively, breaking structure bearishly again. You had that 30-minute bearish break in structure from left to right, right here. So you had a bearish break in structure, which told us, hey, this could be bad, but let's not panic until we investigate our higher time frame pull once again. We don't want to freak out too much because we might be freaking out for no reason at all. Well, let's see. Did it actually transition structure bearishly on the 2-hour time frame? I don't think so. It did not. Let's see why it didn't. So price came up, made that higher high that we were talking about. It had its nice retracement. There's more than 2 black candles. That's an acceptable higher low. You had a very aggressive move up. You have to pick the highest point. And then it didn't even touch the low again. See that? It didn't even touch the low again. It made a deep retracement down, but it never touched the low again. So in saying that, there was no structure break at all in the 2-hour. As I mentioned, you will get those temporary shifts on the lower time frames to make that higher time frame trend happen. Price needs to go from here down to here so that it could do this. So it could mitigate an area of demand. It needed to do this. It grabbed all the late traders. It grabbed all their stops. Smart money got involved, and then it took off to the races again from there. So there was nothing bearish at all. In fact, the entire leg up from here, based on what we see so far, looks to be bullish. There wasn't a single bearish break on that pull. And then obviously the break would have been here because that's only a wick. This almost looks like a bearish break, but it wasn't. It's only a wick lower. Then it went up higher. Then you had 2 black candles in a row right here. Did it hit the daily higher high is the question. Oh yeah, it went right through it. Went right through the daily higher high. So you see how all this relates. And we will be making use of this as time progresses, of course. It is something that many people do struggle with and will struggle with. I can promise you that much. It's not going to be easy. It's going to take time to learn this, but it is of utmost importance, and it will help you build that narrative. It will help you get into trades and absolutely help you de-risk trades, and will assist in breaking even rather than losing trades quite often, right? So overall, is it a key to profitability? Absolutely.